Raven, you'll achieve it all, it all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all, it all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear, loud and clear,
I didn't say my throat.
loud and clear, loud and clear. Shout it loud and clear, loud and clear.
Good evening, everybody. Good evening.
Loud and clear, shout it loud and clear.
Clear my throat there for a second. Sunday night, folks. Sunday night. Super spectacular right here. All right, ladies and gentlemen. Good evening, folks. Good evening. Good to have you all here. And let's get started. My gosh, I was having a little trouble with my Zoom. I think I kind of doubled it up. I'm not really sure what I did. But anyway, let's get started, folks. It's 8:03. And good evening, everybody. Welcome to DayTradeSPY.com's Week-In Review for Sunday, August the 18th, 2024. My name is Hugh. Going to go solo on this here tonight. Going to give you this here is, of course, the, excuse me, the disclaimer. Yes, keeps the lawyers happy. Give you a second here to read this, and I will be quiet. So go ahead and say it. All right, here we go. All right, now that you read it. You alone are responsible for all your own trading, and past performance does not guarantee future results. You all know that. Charts courtesy of Schwab, Thinkorswim, and Tasty Trade if we use them. So, all right, a couple quick things here, a little bit of housekeeping. First of all, welcome everybody. Lots of room in the front here. There's a questions box, the icon on your Zoom dashboard. Click on that. I am the only one that sees that, so go ahead, ask whatever you want. I'm trying to get to all your questions and comments. The other thing is sometimes if I speak a little bit too fast, just tell me to slow down. Excuse me, get a lot of very compassionate about what we talk about here, so I try to stay on course and whatnot. And yes, I'm going to try and keep it down to an hour tonight. Okay, we're not gonna go much more than an hour tonight, all right? I realize it's it might be a beautiful night where you are and want to kind of enjoy the last little bit of the summer here as we head into the last half of August. Can't believe already it's August the 18th. My goodness, state fairs started and everything else. All the fall events are starting to kick in here, and late summer, kids starting to go back to school and stuff. And man, it sure went by fast. But anyway, let's get going here. All right, there we are. There's a picture of me, yours truly, and yes, it is live. I'm just wondering if it's a little too dark or not. If it's too dark, I'm kind of yellow there, aren't I? Less orangey, fiery. I wonder if I close the lines, it might help a little bit. Let me just try that. See if that helps. Oh, my hair is a mess. My hair. All right. I think that helps a little bit there. Let me just take a look here. Okay, yeah. This way it puts more light onto my face. So, so for those of you lucky people, good to have you here, folks. Week-In Review, questions box. Find a little icon again on your Zoom dashboard. That's what you click on. Ask me any questions that you want. And I see a lot of people still joining. We have a lot of people on here tonight. Oh my gosh, this thing is really going to be a very popular event. Every Sunday night we kind of go through this, which is really pretty cool. We go over the what happened last week and see what happens coming up on the week. And we just sit and chat and go over some questions and whatnot. So yes, okay. All right. If you are new to options, let me know in the questions box. Just curious. And if we have a lot of people who are new at options and they don't, and you don't know what we're talking about, maybe we'll stick around later and go over primer. I don't want to do that during the session because I don't want to kind of bore those people who, of course, know all about options. And I see most people here are very familiar with options. Good to see that. Okay. Here's what we're going to talk about here tonight, ladies and gentlemen. We are going to give you a bit of an introduction, who we are. Take a look at the weekend review, look at next week. Excuse me, give you a little bit of a beachside chat, show you how we can help. And I got a 2-minute tutorial here for you. All right, 2-minute tutorial. These have become very popular too. So just a little bit of just a little brief, so we pick a topic and that's what we just talk about. So, all right, so let's get started here. A little bit of a background on who I am, who we are, and why you should listen to us. Excuse me. Been talking all day here today, so a little bit of a raspy throat. So it's so I don't know. Why should you listen to us? What do we know? Who are we anyway? What gives us this, this honor of being able to tell you what to do, how to trade? I guess the many years of trading is probably the in the trenches trading is probably what gives us the credentials to teach you how to trade. All right. So coming from corporate America, lost my financial advisor blew out half my account. That's when I learned how to do this myself. Took a lot of courses, different things, but it was actually the school of hard knocks that taught me how to really trade well. Okay, and one of the things I used to do was had to be very careful with my money. See, I was not born with a silver spoon in my mouth, and I mean some people are, and but I had to work hard for all my money, and especially to keep it. And I found there are two components. Earning money is one thing, but keeping it is another. And that was a bit of a struggle. It's like they say there's rich and there's wealthy, right? You can be rich, but you're not wealthy. And a lot of wealthy people are out there. A lot of your neighbors may very well be very wealthy, but you don't know it because they're just normal people, and they talk about normal things and stuff, and you don't know they're very wealthy until after they die, and and their will is revealed. And I will leave $1 million to, and then $1 million and 1 million. And all of a sudden, oh my gosh, they had all this money. You never would have known it because they didn't have the fancy yachts and the Porsches for everybody in the family, and the the cottages or the beach houses or whatever, right? They just kind of live normal lives. Those are the silent wealthy people, right? Then there's the rich people. They are the ones that, oh my gosh, yeah, I'm gonna drive that new Ferrari, and well, a lot of people can get those fancy cars, right? I mean, really, if you're just creditworthy, you can get a fancy car. Just keep driving it until you miss a payment, then somebody else is going to come by and pick it up. Right? It's kind of the way it works. So just because you see somebody driving a Porsche 911 Carrera or something, doesn't mean they're actually wealthy. It just means that they have enough credit, perhaps, that they're able to get a Porsche. Not that any Porsche drivers here are not wealthy. Don't get me wrong. I don't want to say something like that, but they're not equal, right? They're not the same. They're not one and the same. But anyway, I learned how to trade. I learned how to trade because I had to. I had to because I did not want my kids missing out on good schools when they were going to be at the at that college level. And that was one of the reasons, of course, I was working so hard and saving my money and handing it out to my financial advisor. And of course, when I realized that this is not going to work, I had to learn. I had to learn how to do this. I had to. There was no choice. And I learned it. And learned it. I did. Learned it. I did. So I discovered a lot of things. But one of the things that one of the exercises that I had done was to, whenever I had a loss, I would always go back and see, why did I lose? What changed? What did I miss? How could I have done it better? And most of it was a self-reflection kind of a thing. Okay. And I learned a lot of lessons. And I think I learned more about myself than anything. That's where you learn a lot about yourself is trading, when you reflect on those things. And I don't know about you guys, but when I say guys, I mean gals as well. You trade, right? You make money, you trade again, you make money, you trade, you make money, then you trade and you lose. And you wonder, oh, well, I just lost all the money I made and then some, and then you trade again, you make some money, but you have losses. And you wonder, maybe you don't wonder, maybe you just kind of go on to the next trade, and sometimes you just lose until you're out of the game. But I found that it's the losses that really I got the biggest lessons from. And in some convoluted way, I thanked the Lord for giving me those lessons, because had I not had those lessons with the losses, I would not have become successful. I know it sounds crazy, and who enjoys losses? I certainly don't. I don't know of anybody who enjoys losses. But whenever I had a loss, I'd go back. I would review the trade. Say, okay, something happened. Something happened. What is it that happened? Because when I entered this trade 3 days ago, it looked like a pretty good trade to me. I really felt that this was going to be a profitable trade for whatever it was, whether it was a scalp or 5% profit or 10%, or maybe I was going to ride it up to a certain level. What happened? What happened? And then I would figure it out. And I would say, oh, so if I did not get greedy, I would have been happy. I would have been successful. Interesting. Greed. And for me, greed was actually a big factor. Now, my friends will all tell you that I'm not greedy at all. I give the shirt off my back if you want it, not a problem at all. Um, there are times I just hand my car keys over to somebody who'd want it. Oh, Mr. Grossman, I got a date. I'm taking this girl out for dinner, and my first day with her. I kind of want to impress her. I don't really want to drive my 1978, Ford Galaxy, my father's Ford, whatever. Can I borrow your car? Jokingly, I'd hand him the keys. Oh no, I was just joking. Well, I'm serious. Do you want to borrow my car? Because I had a nicer car. What, are you serious? Yeah, it's just a machine. It's insured. I trust you're a good driver. Are you? Oh my gosh, you're kidding me. And then off they go and they'd be so happy. Anyway, it's just a machine. Um, Folks, I learned how to trade, and then if I stopped doing all those things that were costing me money and doing more things that were making me money, eventually I found that, hey, this is kind of cool. This actually works very well. And eventually you start, making some serious money on the stock market. Anyway, that's my background. Then what happened was people started to notice and they started to pressure me into showing them. And that's when the whole Day Trade Spy business part of it grew. And then that was in 2010. We've been doing live trading and courses and everything else since 20. That's what we're in our 15th year. And a couple of years ago, I guess it'd be now a year and a half, 2 years ago, Eagle Financial Products bought us out. They brought in Aaron Stevens. So there's me. All right. So I'm from the in the trenches trading, short-term breakout trades, small multiple gains a day. Excuse me. Aaron, on the other hand, they got this guy from $150 million commodity fund. They snagged him. They snagged this guy from a fund, and he was the deep dive technical analyst for this fund. In fact, he learned this on his own back in his teens. Now, Aaron's about 41 years old, I imagine, maybe 42, I can't remember. But he identifies excellent longer term, high probability trades. And he'll look at charts, he'll look at different indicators than I look at. So the two of us, we look at completely different indicators. And when our indicators, so let's say he says, I think the market's going to go down. And I look at my indicators and I say, I think the market's going to go down too. Well, we have a saying that says when our indicators unite, our trades ignite. A lot of truth to that. You should probably be buying put options. So together we run the trading room every morning. Excuse me, 9:20 to 10:30 Eastern time. We run the trading room, and this is actually a session whereby you can learn everything we do. And I'll tell you a little bit more about that a little bit later on. Okay, I think it's going to be very exciting. So before we get any further, just an announcement here. If you have not yet subscribed, Spy on the Market. This is our weekly newsletter. It's free. Lands in your inbox every Thursday. Brief read, light, relevant, entertaining even. Subscribe, simply go to the website and leave your name and email address. I don't even think they ask for your name, just your email address on the pop-up, and you'll get the Spy on the Market newsletter. It's something that I write. It's about 750 words, and it is an easy read. I think you'll really enjoy it. This week, we're going to talk about circuit breakers. Circuit breakers, okay? Excuse me, I should change this. It is not my circuit breakers. Who did this thing anyway? Okay, I think it was me. Skipped over that. All right, circuit breakers. There we go. All right, there we go. Just circuit breakers. That's this week's topic. If you don't want to subscribe, you can still read the newsletters. It is in our website. It's on our website, DayTradeSPY.com. Okay, and you can also pick up the previous newsletters as well. I think we've got about, oh my gosh, I want to say 45, 50 newsletters. And another announcement, people keep asking, when are we going to do the 2 to 10K challenge? Well, this time it's going to be a $2,000 to $5,000 challenge. It's going to be September the 16th. We're going to start this. We're going to take $2,000 and turn it into $5,000 in 2 months rather than 2 to 10,000 in 3 months. And the reason we're doing that primarily is to coincide with the elections. Excuse me while I just take a drink here. To coincide with the presidential elections in November. And this way, I think a lot of people will really enjoy this. Start with $2,000, turn it into $5,000 in 2 months. I think it's pretty cool to do that. Nothing special. All right, to join this, all you have to do is be in the trading room. All right, there's nothing extra that you have to pay for or anything else, not a subscription, anything else. You just have to be in the trading room. And that's where we're going to be doing this, okay? That's where we're going to be doing this. So watch your email for details. Pretty soon they are going to be sending out the promotional material on that, and you'll want to get in on that one. All right, so folks can have a beachside chat. Yes, we're still at the beach, and so there's going to be a questions box. Punch up your questions and comments. Like to address them. Hopefully, we'll get to all of them, and we're going to move on. All right. Any questions or concerns you have? Excuse me, not going to be going over individual trades. All right, we're going to keep the general because obviously a lot of people online and your particular options. I can't spend a lot of time on everybody's options. As a matter of fact, we have our inner circle. We also have the trading room, of course. These are the venues where you could ask those following questions. So here's the week in review. Here's what it looked like. Monday through Friday, you can see nice little move to the upside here. Last Monday was a low or no news day. Nothing really came out as far as high impact news. We did get a slight net drop off on the technicals after last week's run up. Late last week's run up. Thursday market came back up. Friday shot up, and on Monday we bounced around here through some technicals. Finding a little support around just under 532. I think it was about 530 and a half. Jumped up here to about 535. We settled in slightly under the opening price on Monday's trade. Getting ready for the PPI Producer Price Index numbers, and that was on Tuesday. The numbers were released. I don't have them handy here. It doesn't matter. It's in the past, but I can tell you the numbers were favorable. I believe they were lower than forecast. Let me just pull it up here. Maybe we can find it real quick here. That would have been, let's see, was that the 13th, Tuesday? PPI numbers came in slightly lower than expected. Okay, so the PPI came in at 0.1%. They're expecting 0.2%, which is what it was the last time. And the core PPI, which is the PPI excluding food and energy, that came in at 0%, and they were expecting forecasted number of 0.2% on that one. Last period was 0.3%. So that number was lower than what they forecast. Now that's good for inflation, because that means they're producing less, and because they're producing less, there's less of a demand, and therefore we're seeing a cooling economy, which is good for inflation. It's anti-inflationary, and the stock market loves anti-inflationary because that's more encouraging for the Feds to reduce their interest rates next month. Therefore, the traders and investors really liked it. They ramped it up here from about 534, closing out at about 542. There's a nice, what about an 8-point move on Tuesday. We held steady here overnight trading, and CPI numbers, consumer price index numbers, they came in to a favorable 3 points, continued on the rally on this on Wednesday. And on Thursday, we had several news items. Retail sales was the big one. Empire State, or you can call it the New York State Manufacturing Index, Philly Fed Manufacturing Index, and the unemployment claims numbers. Again, they all favored a 9-point rise. 9-point rise. There's a comment here I mentioned about an 8-point rally on Tuesday. It's actually 6-point rally from the market open, but going back to pre-market, where there's another couple points in there. Anyway, on Thursday, we had this other massive rally, came in at about 8:30 in the morning, and it shot up and continued on up all the way into levels we haven't seen in quite some time, teasing that 554 level. Then on Friday, we've got some economic data. Carried SPY up another 20. Well, actually, for the whole week, we ran up 20 points here for the week, and it was quite the rally here for the week, especially considering, what was it, 2 weeks ago, I think it was, or a week or 2 weeks ago when we had quite the drop. But it was quite a week. All right. And it's because of all the news that had come out is all anti-inflationary. Excuse me. With the likelihood of an upcoming Fed fund rate drop, despite strong geopolitical threats from the Iran-Israel conflict, many analysts, and myself included, thinking, and not that I'm an analyst, but I thought that it's going to be an interesting week because we've got a lot of are we going to be pulled into a war here with Iran? And here we go again, or still. But turned out that the economic news superseded any geopolitical threats, and the market continued to the upside. So it was a very positive week for the stock market. Looking at the week in review, optimism returns with soft inflation and a soft landing. The S&P is up over 6.5% from August the 5th lows. NASDAQ is up over 8%. And we had some inflationary numbers, PPI, CPI, suggesting a soft inflation. Yet the retail sales and jobless claims are better than forecast. So it measured a cooling economy, but we're not on the cusp of a sharp downturn or a recession that a lot of people were sort of afraid of a couple of weeks ago, which is why the market suddenly dropped. But overall, it's welcome news. But eyes are going to be on the PCE, personal consumption expenditures. This is the Fed's favored inflationary indicator, and that's coming up at the end of this month. So now the Fed's own numbers, they suggest that their model shows that the PCE is likely going to fall under 2.6% for July, and Fed Chair Powell noted the other day that he said, basically, inflation doesn't have to get to 2% before we're going to start raising rates. We're probably going to be okay with it a little bit higher still, but as long as it's going in the right direction and everything else, they'll probably raise the rates. So they're really lowering the rates. They're really leaning on lowering the rates. A lot of analysts are saying the question is it going to be 25 basis points or 50 basis point drop in the interest rates. So, but considering that some other countries had already dropped their interest rates, this also tends to put a little pressure on the U.S. Fed Reserve's decision on that. So here's what the week looked like for the S&P, NASDAQ, and the Dow. Up 3.9% on the S&P. Year to date, look at that, 16.4%. It's turning into a very good year. NASDAQ is up even higher at 17.5%, and the Dow's up just under 8% for the year. This week was a positive move for all three indices, or indexes, however you want to say that. Excuse me. As a seasonal chart, the blue line up at the top is where SPY is now, SPY. That is the stock we trade. All SPY all the time. We follow the S&P 500. The red line at the bottom is the composite of the last 5 years closing price on the daily chart. So let's just expand this and zero in on this, and take a look and see where the numbers lie. Well, if you look at last week to from Monday to Friday, last week we dropped about a point off the seasonals, and seasonally going into the following week, we actually rose about a point. So relatively flat, considering the summer doldrums. It looks like it's going to be fairly flat right into even dropping a little bit here into September. Let's just kind of go back a little bit here for a second. Okay, I kind of want to see this if I can find this. So we're going to be bouncing around here into September, and when you look at the um, maybe if let me see, do I expand it here? If I look at September, it looks like we drop here September into early October from a seasonal standpoint. Not to say it's going to happen again, but it may well if we continue to follow the seasonal charts on that. So anyway, let's move on. And looking forward on Monday, it's going to be another low, no news day, no high impact news schedule. Although we do have hawkish Fed member Waller speaking, and I believe Waller is going to be speaking. Let me take a look here. That is what Monday, right? Waller speaking. Where was it here? I thought it was in the morning sometime. Here it is right here at 9:15 in the morning. Fed member Waller, Fed Reserve Governor Christopher Waller will be delivering opening remarks at the summer workshop on money, banking, payments, and finance, hosted by the Fed Reserve Board of Governors in Washington, D.C. That's coming up on Monday, 9:15. Not sure what he's going to say or how that's going to affect the market. Probably won't be too high of an impact. Tuesday is another low, no news day. Not a whole lot scheduled for that. We do have a couple Fed members speaking in the afternoon. We have Fed Reserve Bank of Atlanta President Raphael Bostic and also Fed Reserve Governor Michael Barr. They'll be speaking in the afternoon. One is slightly hawkish and the other one is slightly dovish. They'll probably cancel each other out. On Wednesday, we've got the FOMC meeting minutes from the last time. So there's no surprises there, okay? But this is going to be a more detailed record of the Fed's most recent meeting, providing in-depth insights into the economic and financial conditions that influence their votes on where to set interest rates. So that's going to be discussed on Wednesday in the afternoon. Watch for a little volatility there. And then on Thursday, we get a little more news, unemployment claims. We have the S&P Global Flash Manufacturing PMI report, and also the S&P Global Flash Services PMI report. That is coming out on Thursday morning. All right, we also have existing. No, it's not existing. It's let me correct the typo on this. Existing home sales. There we go. Existing home sales. Also, day one of the Jackson Hole Symposium in Jackson Hole, Wyoming. This is where finance ministers, a lot of the who's who, the financial world get together at Jackson Hole. This is a conference they hold every year. It's attended by central bankers, finance ministers, academics, and financial market participants from around the world. I don't think I'm going to be attending that because I have the morning trading room to deal with, right? I'm going to be hosting the morning trading room, so I had to tell these gentlemen that I will be unable to attend, but thanks anyway. These meetings are closed. By the way, that's a joke, okay? Just for those of you who are taking it seriously here. The meetings are closed to the press, but officials usually talk about with reporters rather throughout the day. Comments and speeches from central bankers and other influential officials can create significant market volatility. So we see what happens there. All right. This is also called, by the way, the Kansas City Fed Economic Symposium. This happens annually right around this time. So watch for some news that are going to come off, news that's going to come off that. And the day two of that symposium, that's when we have Fed Chair Powell speaking at the symposium, and his words will definitely resonate with the markets. That's going to be on Friday morning at 10 o'clock. He is going to be speaking about the economic outlook. at the symposium. So his words will definitely move markets, all right, and also new home sales on Friday. So how does this translate at the in the bottom line? Low volatility. I expect Monday and Tuesday. Wednesday a little bit more moderate, but expect high volatility Thursday and Friday, giving us opportunities to make some serious money in the market. Trade smaller gains. Look for smaller gains early in the week, and then maybe shoot for higher gains the rest of the week. All right. My motto: trade small, trade often. Just simply the law of numbers should make that work for you. Okay. This way, if you do make a mistake or lose some money, it should not, right? It should not impact your your account balance too significantly. So I was talking to somebody the other day. They were very good at trading, and they're going in a little bit too heavy. I mentioned that to them several weeks ago when I saw some of the numbers they're coming out with, and I said, unless you have like an awful lot of money backing you up and you're okay, my opinion is that you're taking a very, very high risk, trading, hundreds of contracts, even though you're making some very good money. Because this doesn't take much to suddenly something happens, right? The winds of the market change very quickly, and they can come out of nowhere, and suddenly you're now underwater. And it turned out he was down quite a bit at one point, and we had a little discussion about that. So, well, if you trade small, trade often, you're getting the same sort of adrenaline rush from trading because you love to trade. Get in, get out, get in, get out. Make small trades. When it reverses, get back in. Make another small gain when it goes up, and when you start to see the market flutter, get out. Wait for the pullback, get back in. But anyway, hopefully he's learned that lesson. I hope he didn't lose too much overall. But folks, the market actually gives us opportunities all day long, many, many times. Many times. And you'll know that if you read my last Spy on the Market newsletter, you'll see that my one thing, a couple of weeks ago, I talked about find your one thing that causes you to lose money. Well, my one thing was the realization that the stock market is actually my best friend, not my adversary at all. Um, People think that, oh, it's me against the stock market. Well, actually, if you recognize all the opportunities that the market gives you, you're going to say, oh my gosh, well, thank you. Thank you, Mr. Market. You're giving me actually opportunities. I just have to learn how to dance with you. Or Ms. Market, I should say. Yeah. Because if I can learn how to dance with the market instead of against it, it's amazing how much money you can make. Anyway, we teach you how to spot those opportunities and actually how to trade them. So I'm going to talk about this. We're going to talk about the trading room because this is where it all happens, folks. This is what happens. These are live teach and trade workshops. This is what we do. We talk about this. It's moderated by yours truly, Humble Hugh, and the amazing Aaron. We get on every morning. Every morning. This is where strategies come alive. All right. Every morning, 9:20 to 10:30 a.m. Eastern time. So we have several strategies that we look at. We've got the OMG, which is short for out of the morning gate. It's based on breakout strategy. All right, early in the morning. We also have scalps that we do. That's my favorite, scalps. Get in, get out, get in, get out. Aaron has longer term strategies that he invokes, and we discuss them. We narrate them. We tell you why what we're looking at, why we're getting in when we do, what we're looking at, and how to get out. Uh, we do sim accounts, and also I have to show you by law sim accounts, but I also do real trades, which we discuss. And this is where you can actually ask questions. These are interactive sessions. So you can actually punch in the questions box. Can you just review why you did what you did? It's exciting trading. You're going to learn and earn. And I'm going to blow my own horn and Aaron's horn. Yeah, we're the best. Okay. I know it sounds arrogant. I don't mean it that way. I'm actually humble. That's why my friends call me Humble Hugh. But we've been doing it a long time, folks. That's really the bottom line. And we've been mentoring a long time. And what we do is we teach you what we trade and we trade what we teach. We don't hide anything. Somebody asked me a while back, "Oh, Hugh, what indicator do you don't show? What is it that you're looking at but you don't show us?" I said, "I show you everything that I look at. Aaron shows you Well, I don't think he shows you everything. He has other things that he looks at too that are more advanced. Okay. So, but the reason he doesn't maybe disclose those is simply because that's more of an advanced technique that he does talk about some of these things, but there's no secret. There's no secret. Nobody's withholding anything. We trade what we teach. We teach what we trade, and you're going to learn. And we've been doing this a long, long, long time. We make money, and so should you. You can watch us make real trades, real setups using real money as well as the sim accounts. Again, get your questions answered all in real time. And we're quite proud. We're very proud of the fact this is the longest running trading room that we know of. We've been doing this since 2010. 2010. And and you should be on this. If anybody who is not on this, I'm going to ask you why. Why? Maybe there was something. So I don't know. The question is, can you afford not to subscribe? Not to subscribe. The cost is only $6.99 for 3 months. And now, if you go to our website, DayTradeSPY, if I'm not mistaken, you will find that the price is actually sort of it's what I would call like the rack rate. It's actually higher. But to get this special $6.99, you have to contact customer service. Very easy. Just simply go email customer service at daytradespy.com. Ask them for the discounted price for the trading room, the 3 month discounted price. Okay, ask them that. All right. And if you know what calls and puts are, you belong there. You belong there, okay? Every morning we get online and this is where we discuss where the market is going to go. And now, admittedly, I was not on last Friday, a couple days ago, because I was flying to an event in Washington, D.C. And Aaron had full control of the trading room and also the pick of the day and everything on Friday. So I had not had a chance to review any of the activities on Friday. But if there's any trades on that are still open, I'm sure he will review those tomorrow morning. Yes, today's Sunday. Yes, tomorrow morning he will be on, and we will ask him about any trades that might still be open. All right. So and we'll discuss that. All right. So let me see here. What can we get into next? Beachside chat. There I am. Let's take a look at some of your questions here. And we'll jump into a 2-minute tutorial with a little bit of a break. And let me just punch this up here. Okay. All right, let me go. What happened to Friday's pick? Mike, yeah, I don't know. We're gonna have to discuss that with Aaron, see where that came from. I have a feeling that his indicators were set up at a certain, in a certain. I think he went with puts or something. Again, I didn't follow that. In fact, I was completely out of the market from Thursday on. But I thought he went with puts. So I understand that there's probably a really good setup to the downside on that one, and something may have changed from 9 o'clock to 9:30. I don't know, Mike, but we're gonna get to the bottom of it tomorrow morning for sure, because I'd be curious too. Okay, so let me get back to some of the other questions. We've had a lot of good questions here come up. All I'm hearing is music. Yes. Okay, so the way these sessions go, Ken, and anybody who is new on, is we play music going into the opening sessions, whether it's you'll see this in the trading room and in the inner circle weekly meetups and the Sunday night meetups. We play music going into that. The reason is so that you can make sure that your audio is alive and well. And there's nothing worse, right? And I'm sure you've been on those webinars where it starts at 8 o'clock and the guy comes on at 8 o'clock and his microphone's not working, his speaker's not working. They spend the next 15, 20 minutes trying to get the technical stuff out of the way. We don't want that. We just want to make sure that, okay, if you don't hear music, you better check your audio, check your software, your hardware, everything, and things should go. Right? That's the reason we do it. Not just to entertain you, but that's why. So And Bonnie, congratulations, just opened her first Tasty Trade account. Gonna be putting on my first trade tomorrow. Is the strike price the cost of one option? Is the strike price? No, the strike price is not the cost of one option. The cost of the option will be the ask price of the option. Check your option chain. That is going to be the ask price is going to be the cost of the option. So if you happen to see $2.50, you have to multiply that by 100 because each option controls 100 underlying shares. So if you see $2.50, that really means that a single option is going to cost you $250. Okay. Plus a little bit of commission, whatever your commission is. If it's 65 cents a contract, then it'll cost you another $6.50 or whatever it is. So based on how many, that's if you buy 10 contracts. You buy one contract, it'll cost you $65. No, sorry, 65 cents. 65 cents. Some brokers may have a minimum of a $5, whatever the commission structure is. So I hope that kind of clears that up. Just kind of scrolling through these questions here. Congratulations to Don. Don R. said, good evening. I had a great week last week, good week last week. Made a profit of $4,906 trading 10 contracts. Hope to move it up to 20 contracts soon. My goal is $1,000 per day. Enjoyed this having thanks to you and Aaron. Thank you for that, Don. Really great to hear that. That's actually really cool. I love success stories. I think it's the success stories that actually drive me. You know what I'm saying? And we were talking about this the other day. Aaron and I were sitting around chatting and with our bosses and stuff in the trading room. We were talking about we don't really have to do this. You know, we can just simply trade, right? We can get in and trade for a half hour, an hour a day, or whatever, 10 minutes a day, and make all the money that we want, really. But we're talking about how what we really enjoy is the interaction with all the wonderful people out there and our members, our inner circle members, our pick of the day, our signal day trade spy signal members. We like to interact with the trading room members, and we enjoy it. It's almost like we're friends or something. And I know some people have been in the trading room for years, years. I think I've got one gentleman in there. He's been in there for like 7, 8 years or something. And I mean, it's awesome. Let me just see if he is on. Terry. My good friend Terry. I never met this guy, but he's been in the trading room now for many years. Yes, he's on. Hello, Terry. Good to have you on. I'm not going to open up the mic. I'm not going to put you on the spot, but good to have you on. Terry W. Um, anyway, no, it's just a lot of fun. And here's another reason, and this question comes up a fair bit, is why do you guys bother teaching us if we can just trade? And that's such a valid question. And I would be asking that question too. And the answer is, well, the short answer is don't ask why, just say thank you that Aaron and I do this. But the long answer is simply this. We enjoy teaching. And you know what? It actually keeps us sharp as well. All right. Because by having to teach people, we have to stay on top of our game. So we can't get complacent, right? Keeps our minds sharp. We're always looking for the news that is going to move the markets, right? And that's what moves markets. It's news. News is the fundamentals that moves markets. Now, that is going to be my segue into this next question, which I got an email from my good buddy Howard. Let me see if Howard is on. Howard, let me go through the list here. We got hundreds of people on the list. So I got to scroll through that. Is Howard on? What? Howard is not on. Okay, he is going to get the recording. That's really too bad. Okay. Okay, well, Howard asked this question. Okay, he's a little concerned. Howard is concerned uh, about the politics that's coming up. He's talking about his question now during the DNC, right? Democratic National Convention in Chicago starting tomorrow. I guess they're expecting some commotion in the streets and some possible trouble like we had in 1968. I don't know. I suspect that I don't know what's going to happen. The question is that going to, sorry, is that going to be domestic instability? and contribute to a downward pressure on the market tomorrow. How's that going to affect the market? Well, again, excuse me for coughing here. If there is some sort of a big demonstration and possible disturbance, that will probably just be a localized event that will not have any national or global reach, and therefore I don't believe that will amount to domestic instability or anything like that. I think that's just going to be a localized kind of a situation, and I'm pretty sure it'll be well controlled. But that should not affect the markets at all. That's not what's going to move markets at all. Next question here. During the convention, the candidate will get a temporary bump in the polls. With this happening with the market, how is the market going to interpret this? Like Trump winning or losing? How's that going to contribute to the overall downward trend for the week? Again, I think that would be that would not probably be an influential event that is going to move the markets at all. Okay, so again, I think that's going to be a localized. If there is any movement at all, it can be just a very short term, just a blip in the action, nothing really. All right. Bradley, thanks again for your question. I am seeing that the pick of the day on Friday was the puts, and I am also wanting to get an answer on that. I'm not trying to defer the responsibility on that, but I think we are going to be talking to Aaron and find out just what it was that he saw or what changed from the time that he had done his analysis to the time the market opened, because the market went to the upside. That's something that he should have picked up on. And again, unfortunately I was not involved on that decision, but I will be talking about it tomorrow. Now, the other thing is this: I don't know where the market is tonight. Quite possibly he saw something longer term, because he's into the long-term predictions, and he's actually excellent at the long-term predictions. So it will not surprise you if we see a pullback tomorrow. So if you're still holding puts, and that's the way I trade, even though we tell, especially the newbies, that look at, if you're really into the stop losses, which I am not, but if you know, we have to give some sort of an exit. If you do want to use a stop, we've been telling people, unless otherwise, put a 40% stop loss on there. But personally, I don't use stops like that. I tend to look back and see if the trade will organically come back on its own, or if I can repair it or whatever. But I don't like to use stops. Okay, I have other ways of managing my trades. I find that stops don't work well for me. But if you did use a stop, well, you may have been stopped out on that trade. I don't know. I'll have to take a look at it tomorrow. So, and some people are asking about that. Okay. All right. Open the blinds again. You want me to open the blinds again? Okay, Tom, I'll open the blinds. We'll see how it shapes up like that. Yeah, I don't know what happened on Friday on that one. That was a crazy thing. Okay, okay, okay. Thanks for bringing that up, Mike. Yes, Aaron wrote the follow-up report to the Inner Circle webinar, so I want to, and I'm going to have to put that in writing on tomorrow's follow-up report. Normally, I do the follow-up report. He did the whole thing, and Aaron made a little joke saying that I was actually off meeting with Fed Chair Powell. Truth is, I was not. Okay, that was a joke. I think it's a sense of humor. But I will tell you that no, that was a joke. I did not meet with Fed Chair Powell. But thanks anyway. It's anyway, yeah, that was a little thing that he threw in there. So I have to talk to him about that. All right, okay. All right. Do I see SPY going down at the market? I don't have the I don't know at this point where the market is going. People are lucky. Let me just, you know what? People are asking, where do I see the market going tomorrow? It's a no news day. Let me just see if I can pull up the pull up the charts on that from a technical standpoint. Again, let me just see it. Give me a second to pull it up. I don't have it up. Where did it go? Okay, I have to. Okay, so I'm using Thinkorswim, Schwab Thinkorswim on this. So bear with me while I pull it up. And in the meantime, I'm going to go to some of these other questions here. Um, and okay. Yeah, Michael M. Well, Michael M. By the way, I'm sorry, Mike. I got to get in touch with you and have the discussion with you that we talked about the other day. Um, I haven't forgotten. Yeah, I want to find out what the thinking was behind the puts on that one. So, uh, can't tell where your can't tell from where a day begins and ends. I'm not really sure I understand that question here. Uh, okay. There's a lot of questions coming in here. Okay, hang on. Let me try and get this. Let me see what the market is showing here for tomorrow. Uh, okay, hang on a second here. I have to load in my password. Normally, I have my charts up, but for these sessions, I try not to because I don't want to use the bandwidth in case you know I need the bandwidth for the Zoom session here. Okay, right. All right. Okay. I'm just kind of quickly going through some of these questions here. Um, okay. Okay. Thanks for that, Brian. Brian Z. I got a nice little comment here from Brian on this one. He says, hang on, let me just pull this out here for a second. I just want to, I'm not ready for the charts on this one yet. Come on, get this out of here. Get this out of here. Oh, real trades. Oh, nope, can't show that. Mine's real trades. No. Okay, charts. Okay. He said, "Hi, Hugh. I want to let other potential subscribers know how absolutely transparent you and Aaron are with your trades entered and exited during the trading room and those held overnight. Gains or losses, most are gains. That is extraordinary. Thank you for that." Listen, we're not, we don't hide anything. And if we make a mistake, we'll tell you we misread it, we misjudged it, we missed whatever. And I would like to talk to Aaron. I haven't talked to him about this. But I do want to find out where he was coming from to pick puts on Friday. So um, that was kind of an unusual thing. But I want to bring up the chart here for this is a sim account for the trades here. Let me just see what the market's doing right now. Okay, as of right now, the futures are still pushing to the positive side, but bear in mind that things can change on a whim. So we're going to see what happens. I'm going to try and just zone out in here into and actually zoom right in, not zone out, zoom in to an hourly chart in the middle chart right here. And I'm going to make this my maximum sell. Okay, now I don't know right now. I didn't do a deep dive analysis, but if I'm going to just take a look real quick here and punch up resistance level up at this zone in here, I'm thinking, and again, this is just a very preliminary, right? Preliminary assessment coming in here, 12 and a half hours before the market opens, that we are up at a very strong resistance level. This is a very strong resistance level, and I'm going to zoom to the left, extend to the left. In fact, I'm going to style, let's see, time frame, zoom out even more. Let's go back 3 months on an hourly chart. Where do we sit with this? Okay. So we have some very strong resistance, and this could have been, and I can't speak on behalf of Aaron on this, but this could have been one of the criteria that he was looking at. I don't know, but we had some resistance at these levels here in the past. where the market found it difficult to push through. Okay, and back in here, which is what, middle of July, July the 18th, and then again on the 22nd. We did poke up through that on the 23rd, came right back down though. And after quite a run up here from July the 19th to the 23rd, we suddenly saw quite a drop. We dropped from 556 and a half right down to 538. So 556 and a half down to 538. That's a 18 and a half point drop in a couple of days. Ran back up here. Look at this. Starting on July the 30th, we ran back up here to that resistance level, and take a look at this big run up, and poked at it a couple times, and suddenly we dropped from 554 down to what's that, 508, 554 down to 508. Well, there's a $46 drop in about 2-3 days, 3 days. Is that right? 548. Yeah, look at that. Wow. That's massive. So this is one of the reasons I don't like to use stops. The stop would take you out, but you know, you can have these massive drops, right? Now it looks like we did come back up again to test that resistance here on Friday, and I would not be surprised to see another break to the downside, especially considering that there's no real news, right? So it's going to be mostly technical trading. Now, again, bear in mind, 12 and a half hours before the market opens. This is my brief assessment on the situation. That's what I'm telling you here. So, question: what is my email? My email is HughG, HUGHG at DayTradeSPY.com. If it's a general question concerning any subscriptions or any administrative, contact customer service at DayTradeSPY.com. Because if you ask me for any of that kind of information, I just have to send it back to them anyway. So go directly to them at that. So, all right. Mike is asking, what is the difference between the pick of the day and the DayTradeSPY signal? All right. The pick of the day is a trade that usually Aaron and I both discuss and come up with a pick. Again, Friday, I'm sorry I was not involved in that. I was actually in flight, but so we determine which way the market is going to. The way we see the market at about 9 o'clock in the morning. All right, 9 o'clock in the morning. So things can and do sometimes change between 9 and 9:30. But we generally are spot on with the pick, and the pick is sent to you in your inbox shortly after 9 o'clock. It is designed to be purchased at market open. So the pick is anchored in time. What we're saying is that you buy it here, and at some point in time, it should deliver you the 6% gain sometime during the day. However, the pick is also designed with lots of time. It's designed that if you need to hold it overnight, you can. All right, you can actually hold it for several days if you need to. All right, so that's kind of the way that is designed. Now, the DayTradeSPY signal, on the other hand, is designed a little bit differently. It is an algorithm-based signal that is triggered 3 to 5 times a week, and it could be at any time, but usually it's in the mornings. In fact, I can't remember the last time I traded in the afternoon. It's always, I would say it's going to be in the mornings, okay? And you would get this as a text on your cell phone and an email, but within 2 minutes of getting the text, buy it right then and there. Buy the particular option that you are given, and put it up for sale for a 5% gain, with the purpose that if you don't get your 5% gain by the end of the day, sell it for the market price at 4 o'clock. Okay. That has been working exceptionally well. As a matter of fact, on Friday, as I understand it, the signal went with calls and it filled fairly quickly. So, and that's what that is. So that's another subscription service, and it's for like the active trader who may not be able to watch the markets all day and watch the charts, But if you've got your program on your cell phone, you're able to just get in there, make the purchase, and immediately put up for sale for sale for 5% gain, and walk away and come back later, collect your profits. It has been working extremely well. So, okay, Howard is on. Okay, good to have you on, Howard. I just answered your questions, though. I hope you got it. Okay. All right, my goodness, 10 o'clock or 9 o'clock already. Let's get on to the 2-minute tutorial, folks. I want to kind of quickly go over this and maybe pick up a few more questions along the way here. Tonight, we're going to talk about candlesticks. Candlesticks, how to read them, what they mean. All right, and I'm going to give you a quick, going to keep this into a 2-minute tutorial. And let me just pull this up here. Where did it go? Here we go. All right, so a lot of people who are new on trading, new to trading, don't may not really be aware, but it's very easy. Candlesticks are very, very easy, and in about a minute you'll know what these things mean. And well, let me just pull up a drawing tool here. So does this work? Yes, that works. Okay, let's go back. Okay, so what this means is this. When you see a candle, the price for, so every chart, you'll see the time on the bottom, and of course the price over here on the right. Okay. I hope you can see this. Okay, on the price on the right and the time on the bottom. Okay. And so every candle represents whatever the time frame is, whether it's a 1 minute, 5 minute, 30-minute, hourly, daily, weekly, doesn't matter. All right. The candles all perform the same way on charts regardless. So what happens is let's take this candle here, this green candle here at 9:51. All right, so the price comes in right here at the top of the body, and it bounces up and down to the top of the wick, bottom of the tail, and it exits. Sorry, I did this wrong. Oh, let's go back. I did this wrong. It enters at the bottom of the body on a green candle, enters at the bottom of the body, goes up to the top of the wick, bottom of the tail, and it exits off the top of the body. Does that make sense? Very easy. Sometime during this green candle, right, from the beginning to the end, I should say, it moved from the bottom of the body to the top of the body. The converse is true for the red candle. Red candle, it enters at the top of the body, and then sometime during this time period, jump to the top of the wick, bottom of the tail, and it exited at the bottom of the body. Okay, very simple. So red candle, during this time frame, it went down. I'm having a little fun with this drawing. Green candle, it went up. It went up. Now, that's a funny looking arrow, isn't it? Let's make this arrow a little bit better here. It's actually very difficult trying to draw with a mouse. Okay, you get the drift. Now this here is called a doji. All it means is the price went in and out at the same price. And you'll often see the long tail, long wick. This one has a short tail, long wick, but it came in and went out at the same price. And it oftentimes, not always, but often, all right, often suggests a reversal in the trend, right? Reversal in the trend, which is what happened here. Very simple. So how do you read these candlesticks? Well, when you see a big body like this on a green candle, big body like this on a green candle, it suggests that there's a breakout. And I'm going to see if maybe I can actually draw in this. I'm going to do a different color here. Let's do this green. So let's say there's a resistance. This should be a straight line. I can't do a straight line here. But when I see a big green candle like this breaking out of this resistance level, if this was a resistance here, in case it takes us all the way through, I'm tempted to go to the upside, because suddenly now, whether it's a news item or a mass buying event that just happened, maybe an institution just put in a buy order for a lot of shares or something, there's a lot of buying going on. And when I see a green candle, money begets money. So if there's an increase in the price, other people want to jump in on that. And by doing so, it'll tend to push the price up. So when I see a breakout here, here's my ideal entry when I see something like this. When I see a break out of a resistance level, that'll be the time to get in. Go ahead and feel confident in and making the trade. At least that is the setup. All right, that's the setup. And we go over all this in the trading room. But before you make the setup, you have to make sure there's ample room for the stock to grow into before it hits next major resistance level, right? Because you don't want it going up to resistance level and then coming back down off again. So just because you have the setup doesn't mean it's going to be a good trade. So when those conditions are met, get in, make your money, get in, get out. Look for the next setup. All right, that's kind of the thrust of it. A green candle tells you it's bullish. Red candle tells you it's bearish in that time frame. All right, real-time price action. This works on any time frame. This is real-time activities here. Okay, and all the indicators out there, MACD, EMAs, all those other indicators that you see, and those are the only indicators I use. I'll tell you, you know what? All those indicators that you get, is like last I saw, is like 280 of them on Thinkorswim, and who knows how many drawings and different things. They all show you history. They all show you history. They don't show you. There's nothing that shows you the future. Okay, what we're doing is trying to put together all this historical data, combine it with the fundamentals, and then make a determination that in the likelihood, where is it going to go in the short term, long term, medium term, or whatever, trying to make our prediction using that. But there's nothing that's going to give you a solid 100% prediction on where the stock is going to go, right? But the most you can get is where the stock is now, and the candlesticks are what provides that. So it's kind of that's what we have to see what the charts are. Now, I should tell you that if you are using, say, Thinkorswim, and you'll want to make sure, here's another thing, I think I might have mentioned this the other day. If you do see this here, where did it go? Okay, up here at the top, you see where it says real-time data up here at the top? All right, you'll want real-time data. If you're not getting real-time data, if it says 20-minute delay or delayed data or anything like that, don't use it, because it's not going to coincide with your charts, with your option chains or anything like that. You're gonna get skewed numbers. It's not gonna make any sense. You need real-time data. The way to get it is to fund your Thinkorswim account. Make sure you have money in your Thinkorswim account, and you will get real-time data. Okay, that's the important thing right there. All right, let's get back to a couple more questions before we do call it a night. Okay, I'm a new subscriber to the Pick of the Day service. Can I repeat the trade multiple times through the day if SPY continues to remain flat or on a no news, low news day like tomorrow? You can go in and out. All we're doing here is we're suggesting that at some point the market should deliver your profits for the pick. Okay, now we can't guarantee if you go in the second or third time you're going to get it, but we have a lot of people. So here's the way to actually make more money on things like the pick and the signal. All right, and if you join our trading, we actually get into that in detail. But you can actually get a lot more than 5 or 6%. And we show you how to do that in the trading room. I'm not going to show you that here. You got to pay for that because that's the real value of the trading room, right? But a lot of our traders make much, much more than the 5 or 6%. We have to have a standard of success. If you don't have a standard by which you can measure success, you can't say whether it was successful or not, right? And I've been in trading rooms in the past, long, long time ago, when I first started learning this stuff, and it used to infuriate me all the time where people would say, well, the stock just went up 3 cents, therefore it's a success. Well, guess what, pal? It's not, because you would not have sold it for a 3-cent gain, and I would not have bought it for a 3-cent gain, and 3 cents is nothing. Doesn't cover my commission. And, why would you do that? don't call it a success. You have to have some reasonable level of success, a reasonable level of where the stock is going to go or the option is going to go to claim success, right? So we lock it in at a 6% on the pick and generally looking at 6% on the OMG and also 5% on the signal. So, okay, wow. DNC, they've limited all protesting to free speech zones far away from the convention, like the communist country might. No wishes expected in my backyard of Chicago at all. Good to hear that. All right, John. Okay. Okay. All right, I'm just kind of going through some of these questions here. Why 40% for stop loss? You have to have a stop. Well, actually, our uh, uh, we want to have a. I don't use stops, but I know a lot of people insist on a stop, and I say, look, if you insist on a spot, maybe you know we just pulled 40% out because that's something sort of reasonable that I think a lot of people can handle that, and the stock will vacillate. You have to let it breathe it's going to go up and down, right? But if it's down 40%, you're not comfortable with holding it overnight. Take the loss, and at least you've preserved some capital. That's kind of where we're picking that up. You may want to adjust that to your particular trading style. So, okay. All right, Harry, I'm gonna send that comment down to Aaron as well. Okay, so thanks for that. Yeah, he's got the night off tonight. Anyway, okay, so all right, a lot of questions here. I don't want to keep you. I really want to finish up by 9 o'clock here. And okay. Okay, Lori, last week was my first full week in the trading room. Thank you for that. Started the previous Friday, and by Thursday, my tuition for the room had been covered. Only trading a few contracts will I gain confidence. Friday was a nail biter, first losing trade, stopped out, but ended the day gaining a dime. Congratulations, Lori. All 6 trading days were in positive territory. Thanks for your guidance. Nice to hear that. John J, love the signal. Thank you for that. Okay. All right. So, okay. All right. A lot of, okay. I read those houses for sale. Looks like a great location to trade from. Not sure what you're seeing, Johnny, on that one here. Anyway, folks, it is 9:13. Okay, so how do you save and sync your charts in Thinkorswim once you set them up so it comes up on my laptop and my desktop? All right, I'm going to give the real quick answer on that one. Saving your charts. Folks, when you set up your charts, however you have them set up, I'm not going to go over that. That's a whole workshop we provided. Just simply go up to the top right here, save your grid as, give it a name, and it will pop up. Give it a name, save, and it will pop up the next time you open your Thinkers. This is not a session in that. We did have a workshop on that. I think it's available for purchase where we had a complete set up your Thinkorswim charts, okay? So, but I think what I'm going to do is call it a night and let you go. All right, thank you for joining us, folks. As always, it's been a pleasure. Hope to see you in the trading room tomorrow morning, and we'll find out what happened to the puts.
Now you're the one.
Night, everybody.
Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it. And if you do, then just shout it loud and clear. I wanna know if you really Just shine